Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about 3M India after a very huge surge over the last 6-8 months, whether it is a buy right now or is it an avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Before I talk about 3M India, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term market calls and stock calls. For detailed market talk, you can directly email me and we can work things out. Now about the company, 3M India was established in 1987 and they provide diversified products to various industries. Screen protectors, face masks, packaging sheets, home improvement products to office stuff like boards and clips, etc. Scotch Brite is one of its top brands, has been a marquee brand for 20 years. Top management, strong pedigree of the management, have strong market share in this segment and a market cap of around 30,000 crore currently for the stock. If you look at the numbers, and these are Q2 numbers, although Q3 numbers did come up, but I have already made the presentation. So these are Q2 numbers, and sales dropped by 7%. PAT year on year dropped by 23%. This is primarily due to the shutdown of you can say localized shutdown that has taken place globally as well as here in India. Return on equity and operating profit margin is pretty good at the high teens, so 19% return on equity, 17% operating profit margin. It is a completely debt-free company, high promoter and institutional holding with 13% free float, so that is also a very good thing for investor. And I would like to say that this has been one of the best companies to invest it even in times when there was no pandemic, and the company did really well over the last 18-20 years. It is like a portfolio stock that one can buy and hold, and probably it will give you between 13 14 to even 18 to 20% CAGR over 10 12 15 years. Yes, it did surge over the past year or so because of obvious reasons, but overall also it can give you between 18 to 20% CAGR if held on to for a longer period of time. Coming to the performance, so stock had come under focus post the pandemic mostly, although the stock was being held on to by large investors, HNIs, etc. for many years, and the company kept on delivering numbers. Packaging products and materials of the company used to sell a lot, and that has been doing well over the years. Numbers have been decent until this quarter, so this quarter has been a slightly subdued, but I believe that probably from June onwards things will look up again. Although one must say that June 2020 was a huge quarter for 3M, so year on year it may look a little dip, but on quarter basis the numbers would show up. So I believe that 2-3 months of more consolidation and the stock will continue to surge. Return ratios are extremely robust, as I have explained. Currently, it is trading at high PE, and that is a cause for concern. But I have seen such stocks trade at higher valuations in terms of PE at 70, 80, 90 PE. These are the kind of stock that usually trade in this range. You take, for example, a Gillette, a DMart, you take, for example, a Titan, etc. These all trade at very high valuation. 3M has the pedigree to trade at those valuation. So it has remained range bound for the past few months. There may be a chance that the stock may surge going forward. May not perform exceptionally once economy open completely. So this is not an opening up of economy play, but this is a play in which somebody who is looking for to generate stable returns over 8, 10, 12 years can get into the stock. So why I believe it is a buy on decline? A market leader in its space, that's the biggest point, and they have a large market share in packaging, large market share in producing high-end, you can say gloves, masks, etc., and you can say medical products of such kind. And these could be in demand going forward as well, as far as the thing is concerned, as pandemic has not ended yet, but the numbers could be subdued compared to last year for the next 2 3 quarters, so the stock may just be range bound, and this 1 year could be very good opportunity to accumulate the stock. It is a big consumption play for urban India with the kind of packaging materials, etc., that they produce. It is a good consumption play, but again, return expectation should not be very high. It caters to high end market which is growing currently, the top end of the market, the wealthy, you can say people globally, they are earning even more. It is a very good management and an MNC brand, which is also an extremely positive thing because people would like to buy into MNC brands for a longer period of time rather than trade into stocks. And especially with the kind of market we are in, probably this will just continue as long as the music continues. Then people are very active in trading, but once things reverses, then companies like or stocks like 3M India will be back in focus. A leader in the diversified space without any debt, that is also a positive, and a very high HNI holding. If you look at the technicals of the stock, then strong support is around the 20,000 levels, and major breakout is expected above 23,500. It's a low volume stock, so extremely be careful because it has a low liquidity. I suppose that's why I believe that one cannot just trade in the stock. One has to be patient by buying the stock and holding on to it for a longer period of time. If you trade into the stock, it could be extremely volatile, one result here and there, and the stock could easily go from 23,000 all the way to 17, 18,000, and then people would be worried that it is a high price stock. So it can still be traded with a stop loss of 20,000, but I would prefer buying the stock at these levels for 3 to 4 years, at least a time frame of 3 4 years, and on every major sort of a decline one can accumulate such stocks. And kindly do not go by the price per se. People do message me that how can retail investors buy a 20,000 rupees stock? So if you have 40,000 rupees, rather than buying something like anything ABC stock of 50 rupees, and you buy 8,000 shares of it, I guess, but you can buy 2 shares of 3M India, and it is just that the percentage returns which matters. So always remember that percentage returns matter, and that's why I bring up all sorts of stock, even an MRF. So MRF is beyond realms, but other stocks which are in the this range of 20,000, 18,000, 25,000 is in the realms of a retail investor who want to just put in 25,000 can buy only 1 share of something like 3M India. So has seen strong consolidation around these levels of 21,000. I believe that accumulation could be done over the next 3 to 6 months with numbers not being that great compared to last year. So the stock may not surge that much, and then you can reap the reward going forward, probably 3 to 5 years down the line. So what needs to be done? Buy on major declines and on current levels on consolidation. Keep track of numbers. Have a good 5 year time frame. It can be a cash cow, could give you good 15 17%, even more, maybe 20% CAGR over the next 8 10 years, and have less than 10% exposure into such stocks. So this was my video on 3M India. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.